Good morning, AlgoTrades investors. This is the December 1st weekly video edition of the market update. This is just to keep you informed of what the overall market is doing, the SP 500 index, how the AlgoTrade system is viewing it, and a little bit of a insight into what I feel is unfolding in the bigger picture. So let's just jump right into the charts here. I want to cover one of the biggest problems the average trader and investor has. I'm not saying it is you. I'm just saying a lot of people struggle with these market highs and these market lows. Hindsight's 2020, and a lot of investors and traders see these market highs and these market lows, and they constantly become frustrated, wondering why they can't catch these plays. And they think that just because you get these sharp movements, these V-shaped kind of recovery, sell-offs and recoveries, that because there's a big move, they should have caught it, or they should have caught some of it. And the reality is, it doesn't work. Trading doesn't work that way. You don't pick tops. You can't pick bottoms. You might get lucky and get close and be able to get some of these plays, but picking tops and picking bottoms is a sucker's game. And when the market moves straight down and straight up, just like what we see here, we get these 1 day, 2 day, like really the market creeps up, and then in 1 day half of the move is done. It consolidates, chops around, and then you get these V-shaped kind of moves in the market. You get 2 down days, a little pause, another down day, sharp recovery. It's nothing but a set of, in a bull market, you get very sharp corrections. You get these, more or less, the market tries to buck you off the bull market. And these V-shaped recoveries are extremely tough to trade. And simply, they're not something you can really get involved in unless you're a very aggressive momentum player. And once price starts to break down, you have to try and hope that you're going to get more than a 1 day fall. And same with these recoveries, you get these huge moves to the upside. And of course, after either one of the big down days or the big up days, the market becomes oversold or overbought at an extreme level, and you don't know how far those moves are going to go. So trying to pick a bottom, you could have got in over here, could have got in over here, could have got in here. Either way, trying to pick a bottom and then trying to pick a top is extremely difficult and not something that we really try and do. Instead, what we're focusing on here is more or less trying to catch the volatility in the market, the ranges, and really it's once we get these sharp recoveries, sell-offs and recoveries in the market, you start to see the market have these bounces, this kind of volatility or prices bouncing around, and that's where you get opportunities to get in and get out and build positions and manage positions. It's not so much these sharp spikes in the market. That's you more or less you want to avoid those. If you happen to be short, just as one happens, you can make a lot of money on it. But when you just get these sharp sell-off and recoveries within a bull market, a lot of times you don't get involved, or if you do, it'll be usually on the late side. Obviously, the trend will turn down for short-term basis akin to resistance. You kind of expect it to either chop around or continue to go lower, but the bull market takes back over and rips to the upside. So if we were to just look at the overall equities market and how the AlgoTrade system has traded it this year, this is from pretty much the time when we started to trade the system live with you this year. More or less, we had this sharp sell-off. The market went from an uptrend to neutral, the orange bars, back to a downtrend, and then we saw a sharp recovery to the upside. And more or less, this is when we had our first trade. This was our first pullback over here for the system, and you can see this noise, all this chop, this relatively tough stuff to trade for the average investor. We ended up we had nearly almost 100% winning trades, made some great money in here. Obviously, as the trend flipped to neutral or down, we didn't have any trades and kind of avoided those times. This recent sell-off, very similar to this V-shaped bottom we had over here in the market just as we started the system in March. Very similar price action. We had a sell-off, tiny consolidation, and then it went parabolic and sold right off. And we've seen a sharp recovery back up into the current price, and we really haven't seen a significant pullback. Now we're just starting to see a pullback this morning. The last couple of sessions here, we've seen the SP 500 kind of show some weakness, and we're looking for something like this where we start to get some pullback, and we want to see the market start to oscillate and chop around like this. This messy noise stuff is actually very tradable. It's where we make a lot of our money. Same with these running corrections. We, excuse me, we've performed extremely well during these times when the market does this, and that's what we're looking for. We want to see this market start to get choppy and trade around up here because that's where the money is made, not so much trying to get these straight down drops and straight rallies where the market is completely oversold, but you never know where the bottom is, and then over here where the market continues to just rally without any real pullbacks, and it's overbought every single day. Very difficult, high risk stuff to trade. So let's just take a quick look at a little insight, little article I posted. I'll be sending an email out shortly with this. Now, I wrote something talking about how investors need to prepare for the worst between now and 2016. Now, you can read this article a little bit later, but scrolling down real quick, you kind of get a visual for where I think the major market trend is going. And you can read it in the article, the reasons why. And we're getting into this point here where 2014, 2015 is going to be very choppy, very volatile, and could be the start of a major bear market going forward. And also, if we take a look, I'm talking about the cycle, the 7-year more or less cycle. And if we zoom right down into this chart over here, you can see that since the last few major market cycles have been 7 years from top to top, and we're right here on the 7-year cycle again for the SP 500, and the lows have also been 7 years to 7 years. And so we're talking about the next cycle low being in 2016. So we got 12, maybe 24 months, depending how the market actually does it. We're going to start to see, I think, the market really start to top out here. There's a lot of things unfolding, market internals, breadth, everything is weakening in the overall market. And along with a business cycle that I talk about in this article that shows that we are getting to the point where investors are extremely confident and comfortable, and that is a deadly sign. We're seeing some pretty big outflows in the market, but the average investors are piling in, not a good sign. And anyways, you can read about it in this article, and and you can send me an email if you have any questions after that. Anyways, have a good week. Talk to you shortly. Bye-bye.